Did you know on Wall Street Bets, over 700,000 shares of Clover stock have been posted and shared that people have been purchasing within just this last week? This got me thinking about why people are so engaged in this stock. And obviously I've heard of Clover stock before because I follow Chamath Palihapitiya and his Social Capital, which actually SPAC'd this company onto the markets. But I haven't done my exact, deep due diligence on this company to see should I buy this stock or not. So today we're going to change that. Hey guys, it's Tanner Manson for Future Investing. And today I want to talk to you guys about just that, Clover Health stock and whether we're going to be buying. Now, before we jump into it, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, hit the like button down below and subscribe if you want to see more financial content just like this. Medicare is the federal health insurance program for America for elderly people of 65 years or older. Now, although this might be a good option for some Americans, it's not the only choice. There is actually a private sector. Some of the big players in this field might be something like United Health Group or even Humana. So obviously Clover Health has a huge name to make for itself because it has such massive competitors within the industry that have had their footholds in this industry for decades now. So obviously it's not going to be easy for Clover Health to get a foothold in this industry, so they had to come up with something new. Something that would cut administration costs for doctors and also supply a cheaper, route for patients to be able to get their same drug plans and everything like that will both affect both the doctors and the patients, so then everyone is wanting to be on this plan. That's where Clover Assistant came in, an AI-based application that does everything for the doctors to be able to get sort of a 360-degree view of their patients. It takes tons of data in from all different sources such as primary care or specialist care, all leading into whichever doctor is using that program at the time. It can also help with recommendations on personalized medicine and all sorts of things that might be treated specifically for that client based on the data that it's given. And Clover Health is banking on some pretty cool statistics because of this. For the doctors that are using the system for their patients have seen lower hospital visits, lower cost on patients, higher reimbursement for primary care, and easier communication between their industries. Now that's all well and dandy. I mean, they can have a good story, but what about the numbers? I want to know how good the business is actually doing. Now, this is going off the back of Q2 of 2021 numbers, which was their most recent quarter, for which Clover Health did $412 million in total revenue, which was up over 140% year over year. Clover Health is on track to do a $1.6 billion in revenue run rate for, this full 2021. And whenever you factor in that every quarter they've continued to up, their full year guidance, and also that's not factoring in the large growth that we've been seeing, like these triple digit growth numbers, year over year each quarter. That's just amazing news for shareholders whenever companies continue to push their full year guidances. So the total lives under Clover's management at the end of second quarter was about 129,000 people, which was up over 126% year over year. Another massive triple digit growth within the company. Not to mention that they are the fastest growing Medicare Advantage plan in the United States, growing at a compounded annual growth rate of 27%. That's faster than all 9 of their competitors. And the statistics are showing why they're growing so fast. I mean, they're 17% cheaper than their next cheapest competitor and 41% cheaper than the actual federal program. So I mean, if they can keep up these sort of cost savings and deliver them to, all of these consumers, they're going to be able to grow into this market very, very easily. But now, let's talk about how big is the total addressable market overall. And let me tell you, if you guys have seen the channel before, total addressable markets are some of my biggest, statistics that I love to follow. It's one of my main things that I buy companies for. A total addressable market is like, what's the total audience that this company could possibly be selling their product to? And you don't want to be unrealistic whenever you're shooting for that actual goal, What's my total addressable market as a YouTuber? Not, every single person on YouTube, but it's the people looking for, financial stocks, whether it's Clover Health or, high innovation or high growth companies. That's my total addressable market. And the current Medicare Advantage industry in the United States, serving people 65 years or older, is currently $270 billion US, which they expect to continue to grow to $590 billion by 2025, and the overall entire industry for Medicare is actually a $1.25 trillion industry by 2025. These are crazy statistics, and you know what? The amazing part about this is that Clover Health does not need to be, the biggest player to, make a ton of money. They only need to have, 1% of the market to still make, potentially $50 billion. And currently, they're only in 209 counties in 9 different states. Whenever you compare that in the United States, that there's 3,000 counties in 50 different states that there is a massive, massive industry to still grow into for Clover Health. And actually, I was just reading here that just in August, they just signed up to get their 10th state, which is in Florida, which has one of the highest elderly populations in all of the United States, and also very, very populous there. Over 20% of the people are over the age of 65. That's pretty incredible. So let's just quickly go over and look at the stock for this company. So first off, the actual share price of this company, $8.40. Very easy to buy into for a lot of retailers, and that's why it's a retail favorite, I think. And all the growth and everything like that, obviously. But the market cap for this company is $3.4 billion total. So still a very, very tiny company. But it's funny that, whenever you think about this company at $3.4 billion, they have a run rate for the rest of the year of having revenue of $1.6 billion. 1.6 billion in revenue, and yet the total company is being valued at 3.4 billion, just a little over double. But maybe some of the reason why that's being the case is that obviously, because this company's so new, they're worried about focusing on acquisitions and growing the company, and it's obviously showing it's working, the insane triple-digit growths that they're seeing, but this company is not profitable. They're definitely losing more and more money every quarter as they focus on growth. And on the balance sheets, we're seeing about $607 million in cash with only $29 million in debt. Very big positive sign for me. Now, I did just want to add a couple extra facts just to really pinpoint, how I think about this company. First of all, half of all Medicare users decide to go with a different provider like Clover Health or, Humana or something like this. That is a massive amount of people that might already be warm to the idea of switching to something like a new Clover Health. And Democrats right now are pushing to expand Medicare to people of actually age 60 or older, so that's including 60 to 65, which is actually saying that they might increase the overall size of the Medicare market by over 40%. That is so unbelievably massive and something that should not be underestimated at all. If that ever does happen, okay, and Democrats open it up to 60 or older, this stock will go through the roof just on that news alone. Now, these are where some of my red flags lie. First of all, it's very expensive to switch different insurance carriers, okay? And that makes, clients very, very sticky. And so if we already have those clients, it's great for Clover Health, but being the new person on the block trying to get into the industry, it's very, very hard to take, these clients away from people like United Health Group. It's also hard looking at a company like this after being SPAC'd onto the markets because we don't have any of the history for this company. It's also extremely shorted on the stock right now. Right now, I think it's at 15%, but at one point it was up to like 150%. It was a big stock that everyone was talking about on Wall Street Bets as there was going to be a short squeeze, but ended up, they did do a short squeeze, but then it ended up crashing back down. It's very, very low right now. But there is some weird stuff that I'm seeing in this stock that really, really perturb me. There is a lot of share dilution. And whether you're trying to hold new talent into the company and trying to acquire, these big, big tech CEOs, because at the end of the day, although it's an insurance company, it is a tech company, right? They have an amazing software that they're using that is really, really compelling. But the truth is, they might not be profitable until 2024, 2025. How much more share dilution are they going to do between now and then if they've already been doing it within the past couple months? And a lot of share dilution, almost a scary amount. Now, it's good for the company, right? They get free money over time because they're issuing new shares, but it's not good if you're a shareholder because without you doing anything or even being able to vote on anything, although your stock might say, you have an average share price of $8.40, it doesn't matter if they double the amount of shares. You're cutting, the company is actually cut in half. You might as well be holding $4.20, but it doesn't show it that way. Share dilution is the killer of retail investors because they don't quite understand and they don't look up full share outstandings. It's not a statistic that a lot of retail investors follow, and it can be a big death to companies or at least investors because you're cutting, their overall presence in the company without them even knowing. My opinion on the stock stands like this, okay? The growth is so compelling, and I'm very, very excited for this company, but knowing how long it might be till they stay profitable, institutional investors love profitability in stocks because it's what stops them from dying, right? You can't go broke making a profit. And so I can see this stock staying very, very low until it gets to that point. And you saw other companies like Amazon and even Tesla do the same thing. They stayed flat and, retail investors had lots of faith until they went profitable. And then, institutional investors rushed in. I'm able to wait for that time and get better opportunities in the stock market, instead of having to wait the next possible 18 to 24 months for this stock to actually turn around. Now, that might not be the case. I don't have a crystal ball, but I can only invest on the knowledge that I have today and what I've seen in the past. So I currently don't own any shares in this company, not until, I start seeing that either, Florida's in a massive hit or something like this, where a new quarter comes out that there could be, some potentially new options or new products or something like this that might get me back into the company. But for right now, as it stands, I would want to see a ridiculously low price, and it is still pretty cheap. But I would want to see a crazy, crazy deal for me to want to take a bet on this very risky stock. I'm probably much better off just investing in a fintech company at the moment, or a SaaS or CRM or something like that. Well, this company starts to get a foothold and actually make a name for itself. I'm not saying you can't make money in this stock. I'm just saying I'm not going to do that with my own personal money, because I don't 100% understand the industry or the business. And that's why, I like to stick with what I know more. And there is some things I know about insurance companies. Like, I do know the float of their actual money and holding onto those interest rates while they get premiums early, and then they can invest that capital while they don't have to pay out the claims as fast, is something that they benefit off huge. But with interest rates being so low right now, they don't actually benefit a ton off the float because they can't make a lot of money off of it. So I do know just the industry in general is not the absolute best right now. And so I'm not rushing or dying to be in this stock at the moment. But let me know what you guys think in the comments down below. Are you guys holding this stock at the moment? What's your current price for the stock, and where do you think it's going to, either in the short term or in the long term? I mean, in the long term, this stock could go anywhere. Like, the total addressable market's just so big, and that is what is keeping this stock on my watch list, because obviously total addressable markets are my bread and butter, and I do want a company that has this big of an industry. I just can't wrap my head around it right now. Anyways, guys, that's all for me. If you could, smash the like button down below and subscribe if you want to see more financial content just like this. I really appreciate you guys watching, especially if you stuck around this long, and hope you guys stay safe trading, and I'll see you guys on the next one. Bye for now.